loudest voice in this hall is Facebook's. They're the ones who undermine the basic premise of democracy.
It's about transparency, it's about disclosure, it's about protecting against fraud, and it's facilitating these vibrant capital markets.
When it comes to the U.S. Chinese listings, if I were investors, I'd be really careful here.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone. Welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris, and here's what's coming up on today's program. The energy crisis continues. The EU says high energy prices may risk the recovery. We're live at the Bloc Summit in Slovenia. Kailey Leinz's final policy speech, while Hong Kong's chief executive pushes for a major housing plan in the world's least affordable real estate market. And the central bank of central banks. Later this hour, we speak exclusively to Agustin Carstens, the general manager of the Bank of International Settlements. You can send your questions to him on IB Plus TV Go, or you can tweet me at Flacqua. Now, I'm in Paris. I have to say the roadworks started again, which means that the economy is ramping back up. We'll look at inflationary prices across the world. But first, let's get to the markets with our Danny Berger. Danny, we're seeing actually huge swings when it comes to treasuries and fixed income across the world.
Yeah, it's really this inflation angst hitting markets hard this morning, a pretty substantial spike across the globe. I'm focusing on in both the U.S. and the U.K. because the move in the U.K. is a very large one. We're seeing a lot of these equities selling off this morning of more than 1%. Stock 600 down more than 1%. Let's flip up the boards and quickly look at what your bond markets are doing this morning, though, because as I say, it's really focused in on the long end of the curve. We're seeing your UK 30-year yield spike up by about 6 basis points. In the U.S., if it's a spike of 3.5 basis points. It's significant it's in the long end because this suggests that this is sticky. This is where we get this concern that's hitting equities, that's hitting duration. Now, within that, the other significant move we've seen this morning is really, again, these inflation expectations. So let me take you into the terminal. Looking at break-evens, that very top one are UK 10-year break-evens, crossing 4% for the first time since 2008. This is really the pressure of the energy crisis hitting Europe and the UK. Both UK and European natural gas prices hitting yet another record this morning. So all of that feeding into the ugliness we're seeing in markets. Again, stocks selling off. At this moment, it does seem like NASDAQ and Russell 2000 futures are being hit. So it doesn't matter whether you're tech or you're small caps. It really is a wide breadth of things that continue to get hurt. Now, it really is a stark change from yesterday. Yesterday, you'll recall, we had dip buying really across the space. We had dip buying in tech, we had dip buying in Europe, but that Tuesday turnaround changing into Wednesday wreckage. Again, I bring you to the picture here that we're seeing both NASDAQ futures and Russell 2000 futures sell off. Now, really the concern that this brings into the fore is that what we are seeing, Francine, is stagflation, that the things that are outperforming aren't small caps. Francine, though, I do want to go ahead and turn to Hong Kong because we heard from Hong Kong's chief executive who has announced plans to help ease the city's housing crisis. Carrie Lam began the final policy speech of her current term with a broad defense of the national security law imposed last June by Beijing, saying it had ended chaos and brought stability and better governance to the financial hub.
To safeguard national security in a comprehensive manner, there is still a substantial amount of work for the Hong Kong SAR government, including, 1, taking forward proactively the enactment of local legislation to implement Article 23 of the Basic Law in Hong Kong.
All right, well, while Francine tries to stop some of the roadworks there over in Paris, let's go ahead and bring in Bloomberg's Asia government senior reporter in Hong Kong, Ian Marlowe. So, Ian, I know you were paying close attention to that speech today. For you, what were the big takeaways?
Yeah, I think obviously the big focus here was housing. Housing for Carrie Lam takes care of it's kind of a two-bird with one stone situation where she gets to address this housing crisis. I mean, this is the world's least affordable housing market. And she's also announced she basically announced a big plan for a huge new urban development, hundreds of thousands of new homes right on the border with China. And that takes care of another huge problem for Hong Kong, which was trying to more deeply integrate the city with the mainland. So what she's trying to do is orchestrate and kind of act on President Xi Jinping's vision for this greater Bay Area that includes Hong Kong and other nearby mainland cities like Shenzhen and Guangzhou. So this new housing push is not just addressing a sort of economic need with sort of affordable housing crisis here in the city, but it's also solving a political dilemma, which is just kind of more closely integrating Hong Kong with the mainland.
Ian, what about some of her thoughts on the national security law? What did she say there?
Yeah, she was emphasizing national security the whole time. She also spent quite a bit of time sort of attacking or blaming some of the pro-democracy opposition that obviously cheered on some of the protests over the last couple of years for delaying or stalling policies that could have benefited Hong Kong citizens. So it was sort of there was a big, heavy sort of defensive, almost combative element to her speech here. She was, and this is the last speech of her 5-year term too. So she was sort of bouncing between rehashing some of the stuff that she had done and promising new projects. But there was a huge emphasis on national security, and she also pledged to push forward with this Article 23 security legislation, which, when it was first enacted or tried to enact in 2003, prompted huge protests here in the city.
Okay. Ian, thanks very much for staying on top of this for us. That's Bloomberg's Ian Marlowe in Hong Kong. Now, the central banks of central banks. Later, we're going to be speaking exclusively to the general manager of the Bank of International Settlements as Francine locates to a more quiet place in Paris as that economic activity buzz. She will be bringing you that. If you have any questions for Francine to pose to our guest today, IB plus TV Go is where you want to head. This is Bloomberg.
I think if you are investing in markets, it's impossible to have no view about China. It is too big a portion of the markets out there. It's too big a portion of the global economy to ignore.
Chinese tech companies having Western capital and a Western vested interest in their success very much suited China's goals. They don't need that anymore, so they can take their $700 billion and take it back onshore into Hong Kong.
We don't have all the answers yet, and because I think that story is still TBD, if you will. It's still developing. We're still trying to figure out where it's going to land, but we are still investing. We are still deploying capital in China, and we think that in many sectors the fundamentals are still pretty strong.
Just like other investors, GIC needs to reposition, and I would say perhaps with this move more to so-called hard tech, our expectation of returns also need to be adjusted.
So if you think about education, you think about healthcare, you think about housing, things that impact lower and middle income Chinese people, those are areas you have to be more selective. The same thing around some of the businesses that have a lot of consumer data. But broadly speaking, as China has traded off, I think it could create some interesting opportunities.
Some views there on investing in China from our discussions with investors at Bloomberg Invest this week. Quite the plethora of views. I want to bring us some lines just crossing the terminal, some breaking lines on Germany. Baerbock speaking on the Greens' aim to form a coalition, saying that they seek coalition talks with Social Democrats and the FDP, that Germany can't afford impasse when it comes to those coalition talks. This is, of course, in the aftermath of the German election. They're entering these further talks with SPD, FDP, again, coming from Annalena Baerbock. So let's get to this and more, because as Baerbock is speaking, we also have the EU leaders gathering in Slovenia for a special summit to discuss the energy crisis. We're seeing European gas prices climb to record new highs. The bloc has said that such levels may hurt competitiveness and could put recovery at risk. EU Commission President Ursula von der Leyen addressed the issue earlier this morning.
It is a serious issue. I think we have to be very clear that the gas prices are skyrocketing, and but the renewables, the prices have decreased over the last years and are stable. So for us, it's very clear that with energy in the long term, it is important to invest in renewables. That gives us stable prices and more independence.
For more, we're joined by our correspondent, Maria Tadeo, who is in Slovenia, who also conducted that interview. Maria, I do want to start on these breaking Germany lines that the German Green seek coalition talks with the Social Democrats and the FDP. How expected was this, and what does this mean for the formation of government in Germany?
Good morning, Danny. Well, it's no wonder that Angela Merkel, who just walked past the red carpet here in the summit in Slovenia, did not want to talk to the press, because it's very clear now that the CDU is out of the game, it's out of the picture. The Greens want to enter a traffic light coalition, and this really comes down to Christian Lindner now and the FDP to form an agreement. It does signal now, and it's a very clear signal that this is turning into a traffic light story now, and that coalition that Armin Laschet was trying to form very desperately after that horrible election result for the CDU-CSU is probably not going to materialize.
All right, so Maria, the other topic you've been paying close attention to is energy. We understand a number of countries there, as has been talked about in the summit in Slovenia, they are pushing for a joint gas procurement. What would that look like exactly?
Well, Danny, the first thing, and we have to stress this so much, is that energy is a huge story for Europe and continental Europe. This is an incredibly complex energy market where you have 27 different countries and they all have a different energy mix. Now, given that we're seeing prices skyrocket on a daily basis, the head of the European Commission, Ursula von der Leyen, responding to my question, was very clear that this is a very, very serious issue for consumers and more action will be needed. Now, the debate here is whether you want to take actions on a national level, on a domestic front, or you want to take this on a European-wide level. We heard from a number of countries, including the Spanish Prime Minister, who told me he wants to see EU action. This is not just about the national countries anymore. Of course, those that have renewable energy, those that perhaps are less dependent on gas, will tell you that they don't want to foot the bill for this.
All right, Maria, thanks so much. A lot of breaking news to stay on top of. That's our Bloomberg's Maria Tadeo. So a couple of things breaking here. We have Germany, of course, looking to form a coalition between the Greens, the Social Democrats, the FDP. We also are now just looking at European natural gas futures climbing 22% to a fresh all-time high. So it doesn't matter where you look. We're looking at energy across the board, be it in the UK, be it in Europe, hitting all-time highs. Let's go ahead and bring in our guest host for this hour to really dig into this story when it comes to these various gas prices. As I say, breaking here as well. But actually, first, apologies. Let's pivot to the U.S. before we get in to some of these European lines, because it's not just drama here in Europe. It's also drama in the U.S. when it comes to the debt ceiling. Senate Democrats' third bid to suspend the debt ceiling appears to have failed today, and that's due to uniform Republican opposition. Meanwhile, Joe Biden says he has confidence in Fed Chair Jerome Powell.
I'm just catching up on some of these assertions.
Let's dive deeper into this. Let's go to Bloomberg's Enda Current. So, Enda, where do things stand at the moment when it comes to these discussions?
Well, the October 18 deadline is definitely getting closer, and this will become front and centre now, I think, of investors' minds as we push forward. We had some commentary from the US Treasury Secretary Janet Yellen last night. She told CNBC she pushed back on the idea of minting this $1 trillion coin that some people have been talking about. She made a point that would jeopardize Fed independence, and that it's up to Congress to go out and sell bonds and to raise funds. And of course, we know that President Biden has laid some pretty firm attacks on the Republicans and accused them of blocking progress on raising the debt ceiling, and he says, look, there's a meteor coming for the economy if they don't fix it. So there's clearly no immediate solution or circuit breaker to this, but I think over the coming weeks and as we get closer to that deadline, you'll see a lot more global attention and a lot more global market focus on what is happening in US and what is happening in Congress when it comes to economic policy there.
All right, Enda, thank you very much. That's our Enda Current out of Hong Kong. Now, I also just want to mention breaking news coming fast and thick. We're looking at the Hang Seng Tech Index just closing, falling 1.5% to close at a record. A lot of that angst in Asia coming through some of these other type of indices, be it Hong Kong or Japan with China closed. Up more conversations. This is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris in the safety of the studio after a pretty noisy balcony with a lot of roadworks around the Opéra Garnier here in Paris. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. UK firms are facing a historic surge in inflationary pressures. According to a survey by the British lobby group, the British Chambers of Commerce, a record number of manufacturers are poised to increase their prices as a result. The BCC says firms are grappling with supply chain disruption and staff shortages. Hong Kong's chief executive has outlined plans to develop the city's China border into a major metropolitan area with close to 1 million homes in an effort to ease the housing crisis. In the final policy speech of her current term, Carrie Lam also made a broad defense of the national security law imposed by Beijing last June. Chinese President Xi Jinping is said to be planning to skip the G20 Summit in Rome this month. Sources tell Bloomberg that Xi won't attend the meeting in person, citing China's COVID protocols as a reason why he's not leaving the country. Xi hasn't been seen outside of China since January 2020, but he's attended several meetings virtually. The G20 Leaders Summit begins on October 30th. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now, there's quite a lot going on in the markets. First of all, we're seeing a pretty big repricing of fixed income across the world. The Hang Seng Tech also closing at a record low. And when you look at energy prices, not only across the world, but certainly in Europe, natural gas futures climbing some 22% to fresh all-time highs. So to talk about all of these market effects and, of course, the interlinkage between the wall of worries, Geraldine Sundstrom, portfolio manager for asset allocation strategies at Pimco. Geraldine, as always, thank you so much for speaking to us. Today seems a very significant day because what we talk about in terms of inflation, energy prices, really seems to be coming at the forefront to start some kind of maybe deeper repricing in the markets. How does this end, Geraldine? Are we going to see a big correction when it comes to tech stocks, but also fixed income?
Good morning, Francis. Well, this is a lot for the market to digest. We already had to deal with, shortages in semiconductors, shipping, stuff, and now we have a global energy crisis, which is really putting a spotlight on big importers of energies like China or Europe. The U.S. being slightly more insulated as a big producer, but of course will suffer from certain ricochet and international pricing. So the market needs to adjust to this. The risk is that this is going to create demand destruction. This could be a hit to companies' margin, a hit to household disposable income, depending on how governments deal with the situation. And therefore, there is an adjustment. The last bit will be really central banks, which have pivoted towards a bit more of an hawkish stance. And we'll have to see how they react to this crisis, because we would see this much more as a tax on consumer and companies than something that one would need to react to.
So, Geraldine, are you saying that unless central banks actually act fairly quickly, we're going to see a further correction in the markets? And what's the right policy action for central banks right now?
Well, there's not much that central bank can do about this, I'm afraid. I suppose government would probably need, and Europeans will try, and certainly Chinese are doing so, to try to soften the blow and soften this over time for households. And I suppose the market would welcome less hawkishness because there's no easing, of course. That's not what we're talking about, but probably a bit less hawkishness, seeing this much more as a brake on growth as opposed to something that is inflationary. And I suppose the silver lining to all of this, let's not forget, is that when you look at forward energy prices from April onward, the situation is going to normalize. But for sure, this is going to be a very complicated winter for markets.
Geraldine, what does it mean for your asset allocation? So do you change the industries that you're invested in, or how you look at the market, where you want to be positioned?
So we are being a little bit more cautious, but our medium-term outlook really doesn't change. We just think that we will see a little bit of margin squeeze. We hope that central banks and government will somewhat soften the blow so that we don't see too much demand destruction. And then, of course, you can position yourself in areas where you can harvest those higher prices, like, semiconductors, shipping, or certain commodity companies in equities. So that would be the way to play it. But, this remains temporary. This is not something that we see lasting for a whole year. But as we know, a quarter or a few months in market years is a very long time.
Yeah. It certainly is. Geraldine, thank you so much. I mean, even like 45 minutes seems like a very long time in these kind of volatile markets. Geraldine Sundstrom, their portfolio manager for asset allocation strategies at Pimco, joining us this morning. Now, coming up, hope for retail investors. Well, at least that's the name of a new fund bringing private equity to the investing space in Italy. We'll also talk about inflation and actually what this means for longer-term projects for Hope with the chief executive shortly. Then a conversation with Agustin Carstens of the BIS. That will be a good conversation on how to regulate tech in the banking world, but also how we look at inflation going forward. This is Bloomberg. The energy crisis continues. European gas prices hit an all-time high. EU leaders meet in Slovenia. Carrie Lam's final policy speech. Hong Kong's chief executive pushes for a major housing plan in the world's least affordable real estate market. And the central bank of central banks. Later this hour, we speak exclusively to Agustin Carstens. He's the general manager of the Bank of International Settlements. You can send your questions to him on IB Plus TV Go or tweet me at Lacqua. So good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris. So I'll be looking at some of the foreign policy. We'll talk, of course, about what the U.S. can do next in terms of energy prices and whether they need to break a linkage between Russia and the EU. And even if they want to, how do they do that? But first to the markets, because there's quite a lot of big market moves in today's trading session. Danny and I were talking about some of the repricing that we saw in bonds. Then we spoke to Geraldine Sundstrom, who was saying, look, maybe this is the beginning of something a little bit deeper. Certainly, there's more worries about growth going forward. I'm looking at a couple of other things, which is, for example, a market-based measure of expected inflation in the UK topped 4%. Again, that just adds to and fuels some of the anxiousness that we're seeing about stagflation and what policymakers could actually do in this kind of, concern out there that policymakers have run out of tools and actually we'll just see a repricing that will just get worse and worse. So let's talk about the real economy and what some of the attractiveness can be found still, despite some of these volatile markets. A new fund backed by Amundi and UniCredit will actually bring private equity to real estate in Italy. Named Hope, the fund will actually raise money from retail and institutional investors to invest in Italian SMEs. Well, we're now joined by Hope's founder and chief executive, Claudio Scardovi. Claudio, thank you so much for joining us. I want to talk a little bit about how much money you're raising and what you're focused on. But it's a big market day. It's a big market day for energy prices, for inflation concerns. Does it make some of the attractiveness in Europe more or less? Is it easier to find companies in these kind of uncertain markets?
Well, thank you for asking. I think it's a great question. I think inflation is going to be a long-term concern for the real economy, but also an opportunity to invest in real assets. As you know, as Hope, we are exclusively focused on Italy, on corporates and real estate. I would mention a couple of data points. SMEs. Italian SMEs are roaring back to productivity and growth, which is a good sign. And secondly, from a real estate perspective, we are one of the most, if not the most, undervalued country across Europe. So inflation would be a good topic to consider. Real assets, it's a good investment opportunity for retail investors and institutional as defensive against inflation. I think greenflation, as you probably mentioned, it's part of the topic, but we have a long-term inflation which is basically driven by the money supply and the quantitative easing of the last years.
Right. So, Claudio, how much money are you expecting to raise? And actually, where do you see the biggest opportunities of where you could invest it?
Well, our initial target for the capital raise would be €500 million. Then we have basically green light to raise up to 10 billion in 10 years. And looking at Italy, we're basically pursuing a couple of strategies. So we are a multi-strategy in private equity fund. One is on the best of Italy in terms of competitive corporates. So the excellence of Italy, which would be capable of growing, consolidating, internationalizing, and going public. And secondly, what we call sustainable cities, which is, again, a long-term opportunity, which is even more important in Italy, given the potential opportunities we have in terms of real estate, regeneration, new developments, IT and green infrastructure to develop our cities and territories.
Claudio, how worried are you about some of these high energy prices? Is there anything that the government at this point can do to alleviate some of the concern from companies?
Well, I think it's a big issue in the short term. It will be a minor issue in the long term. My own opinion is my opinion is basically that long term the green transformation will lead to lower prices for energy supply. There will be some volatility in the short term, and of course that would translate into inflation. But we have to remember that inflation is also pushed and promoted by the excessive money supply, which was an obvious result of the crisis we had after the banking crisis and after COVID. So I think it's going to be a war in the short term, but not so much in the midterm. And going real, meaning investing real assets, is again an even better opportunity because of that.
So, Claudio, give me a sense of what you would ask Mario Draghi, the Prime Minister, to actually do to alleviate or to actually push through some of the reforms that Italy needs.
Well, I would just ask him to keeping, frankly speaking, because I think he's doing an excellent job. He is becoming one of the most reputable and respected leaders across Europe. So I think the transformation will not happen overnight. It will take calm, structure, logic, patience. And I think, yes, all of them. And therefore, I mean, I think we have a plan. I think we are becoming one of the best leading countries across Europe and not only. So I think we are on the right path. We just need to keeping.
All right, Claudio, thanks so much. Claudio Scardovi there, Chief Executive and founder of Hope. Now, we have plenty more, of course, on the markets. We have a big market correction when it comes to some of fixed income and, of course, energy prices. Coming up, we speak to Agustin Carstens, a legend in the world of central banking and the central manager of the Bank for International Settlements. If you have any questions for him, just IB plus TVGo, or you can tweet me directly at Lacqua. This is Bloomberg.
I wouldn't be at this company as long as I have been if this company didn't prioritize safety. We do. We've invested billions of dollars. We have more than 40,000 people who are working in safety and security across the company.
Mark Zuckerberg says accusations that Facebook puts profit over user safety are just not true. Now, his comments come after a whistleblower told the U.S. Senate committee the company is well aware of the societal and mental health risks of the platforms. So we'll have plenty more, of course, on Mark Zuckerberg and what we heard this week. The world's biggest tech firms need oversight from financial regulators to guard against their growing market power. That's the view of senior officials at the Bank for International Settlements. Well, they say that the current system is likely falling short of an adequate response to big tech's move into finance. Well, we're delighted to be joined now by the Bank for International Settlements General Manager. He's Agustin Carstens. Mr. Carstens, thank you for joining us on Bloomberg Surveillance Early Edition. I have many questions, of course, also on inflation that we'll get onto in a second. But first of all, how do you view the big tech companies? What needs to happen for them to feel maybe a little bit safer than they are right now?
Well, thank you very much, Francine, to have me in your program. We have probably in the last decade one of the most significant developments both in technology and the financial markets is the very rapid entrance of big tech into financial markets. What is so salient about this is the speed at which they have developed their footprint. Basically, the technology they use allows them to induce major network effects to gain market power extremely quickly. And we have to be very frank, these developments were much quicker than what we realized. And in terms of regulation, we are falling behind. There are at least three key aspects that need to be regulated. One is precisely the issue of competition. Second are issues related to the usage of data. And the third are different aspects that could have a financial stability angle.
So, Mr. Carstens, of course, Google doesn't have the same approach when it comes to finance to, for example, Amazon. Are any tech firms, you think, directly looking to rival banks?
To rival? I didn't hear the last point. Rival banks. Yes, well, you know, the thing is that many of them are making inroads into payment systems, and some are contemplating the issuance of stable coins. Now, payment systems is the easiest way to enter into financial markets. Now, what is key about it is that it establishes a very easy and rapid relationship between the client, the household, the firm, and the company. What also happens with payments is that it generates huge amounts of data. Now, if you combine the data of the payment system with the data, for example, of the network they have, let's say, in their social platform, you get tremendous amount of information, and that allows them to develop extremely quickly. So that can certainly affect some of the key businesses that banks use to lend, the attraction of deposits, and also the capacity of lend on based on a relatively stable platform of deposits. So yes, it is not, our concern is not so much that we need to protect banks per se, but more than anything, we have to provide a level playing field. And that is the key issue here.
But Mr. Carstens, can you define what you're seeing big tech do? Is it cooperation with banks? Is it competition with banks? And again, what does that mean, for example, for some of the crypto platforms?
Yeah, mostly is competition. And for example, commercial banks have a very strict limits to the use of data, even the data of their clients they have. That doesn't apply, for example, for big techs when they develop financial practices. So that's one key issue. Big techs, when they go to finance, they're not subject to the same regulation that we subject banks to. For example, they don't need to hold capital. Oftentimes, they don't have any liquidity requirements, any leverage limits. The way they are incorporated as a firm is very different. So we have seen already some developments in some parts of the world where this different way of treating a similar business can really affect incumbents.
What about, Mr. Carstens, about the global picture? Are Chinese tech companies much more advanced at being challenger banks than what we're seeing here?
Yes, I mean, I think what has been happening during the last year or so, at least during the last year in China, it's a big example. It's a clear example of what can happen. I mean, certainly the two major payment systems run by Alibaba and by Tencent run extremely quickly. They basically now dominate 94% of the payments in China. And they started to do financial intermediation to the point that the attraction of deposits was extremely, and of resources was extremely fast and significant in terms of volume. And that presented some financial stability risks.
Mr. Carstens, where do you see, when you look at the financial or systemic risks out there, Is China something of concern because of Evergrande, or will it be actually held together somehow? How do you see that risk?
Well, I think, I mean, needless to say, Evergrande is, as we say in Spanish, it's very grande, so it means it's very big. Now that basically means that it certainly can have an impact in the Chinese economy, but given the business model it has, I think it's contained. I think that the Chinese authorities have the different instruments to deal with it. So I think it's a big wake-up call, important wake-up call about how different types of financial intermediation oftentimes are hidden behind some business models, and that can represent a risk. So it's big, it's important, it has to be taken care of, but I don't think it represents a systemic risk.
Do you worry about energy prices? And again, the main concern actually facing central banks is what do you do with inflation? Is it transitory, or every day where there's a new record with energy prices, certainly in Europe, does transitory become something of a myth?
Well, I mean, energy prices traditionally are very, very volatile, and yes, they will be affecting markets. I think that the situation has been compounded by the fact that as we get out of COVID-19, there has been many markets that have been disrupted, many supply chains, including the ones in energy, and that has made the moment more difficult. But it's hard to believe that this issue will not be in some way or another mitigated. I think that volatility in prices due to energy are very common. I mean, I come from Mexico, and this is something that happens quite frequently. So, I mean, definitely the central banks need to be very watchful. They need to send the right signals so that, second round effects are not produced by these increases. But otherwise, these are relative prices, very important relative price changes. They will affect measured inflation, but they should not affect the dynamics of inflation into the medium and long term.
So not even supply chains. I mean, again, supply chain concerns have actually lasted longer than we thought, they would. Is there a risk that central banks are just getting it wrong?
Well, the thing is that we are learning a lot about in this period. I mean, we had an unprecedented exercise last year to freeze pretty much the global economy through policies. We brought markets to standstill, and suddenly we're opening them all up. Activity is coming down, is back. But what is very hard to expect is that the post-COVID or the way out of COVID will imply I would say heterogeneous, seamless behavior in the different markets. So we will be seeing several disruptions, many disruptions in the months to come. It's not that there is a major macro or monetary problem there. It's just the fact that the markets need to adjust. So what I believe is that we need to see through this, and I don't think it would help the global economy or, by the way, a national economy to try through monetary policy, for example, to reduce the price of of goods and services that are not affected by the supply chains, to compensate increasing prices in the supply chain. I don't think that would be good for the recovery. Therefore, unless there really is a change in the dynamics of inflation and second round effects are present, I think monetary policy has to continue the way it has been happening in the last months.
And Mr. Carstens, finally, I also want to ask you about green finance. Is there a danger that we're creating a green asset price bubble? And if we're not creating it, how do we make sure that it doesn't come to fruition?
Well, there is a lot of appetite for this type of instruments, for ESG type of instruments. I think that's very positive. What we need to make sure is what this ESG label will really generate the effects on the environment that we are looking for. And as long as we don't have an adequate taxonomy, we don't have enough information, we cannot make sure that whatever, for example, a company promises in terms of these broader objectives are really targeted and are really complied with. At some point, we might find surprises down the road. So I don't think this is an imminent crisis or an imminent problem, but this is more basically what we have been trying to do is to raise our voice that we need to start working today in a very decisive way to avoid problems down the road.
Thank you so much for your time today, Mr. Agustin Carstens there, General Manager of the Bank for International Settlements, joining us this morning for an exclusive conversation. Now let's get straight to Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. TUI is to raise $1.1 billion by selling new stock, making it the latest travel company to tap investors for cash to reduce a giant pandemic debt pile. The share sale will allow the world's biggest tour operator to reduce its draw on state-backed rescue loans to zero. Mark Zuckerberg says accusations that Facebook puts profit over user safety are just not true. The CEO of the social media giant addressed concerns in a note to staff after a whistleblower told a US Senate committee the company is well aware of the societal and mental health risks of its platforms. Tesco has reported like-for-like UK sales for the first half, beating average estimates. The UK's biggest retailer also raised its full-year profit outlook and announced a £500 million share buyback. It says going forward, it's targeting a dividend payout of around 50% of earnings. Soros Fund Management is steering clear of investing in China. In an interview with Bloomberg, the firm's chief investment officer, Dawn Fitzpatrick, who oversees $27 billion, says investors need to be really careful about putting cash into US-China listings.
For 20 years, Chinese tech companies having Western capital and a Western vested interest in their success very much suited China's goals. They don't need that anymore, so they can take their $700 billion and take it back onshore into Hong Kong, and I think that's what they're going to do. So when it comes to the U.S. Chinese listings, if I were investors, I'd be really careful here.
That's the Bloomberg Business Flash. Francine.
Laura, thank you so much. Now we're seeing a repricing in the markets. We look at fixed income and some of the other asset classes too. A full market check is coming up next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris. Now, let's take a look at some of the things we'll be watching out for today. Of course, it's all about the markets, but away from the markets. 10 a.m. UK time, Euro area retail sales, followed by the EIA crude oil inventory report. 11:30 a.m., the Prime Minister, Boris Johnson, speaks at the Conservative Party conference. That could be a really important one on minimum wage. Then 12 p.m. UK time, U.S. data, including ADP employment change figures. And then the Fed's Esther George gives a talk at 4 p.m. UK time. And the global Bloomberg Invest Global Conference, of course, continues throughout the day. So it's packed, and we look at the markets. This is Bloomberg.
The biggest impediment isn't really how much China is buying our stuff. The real impediment is going to be supply shocks globally. That's going to be the biggest drag on growth in the second half of this year.
Consumers have delevered. During this process of accumulating extra savings, they have actually delevered themselves to the point that they actually not as worried about, higher interest rates as much as they were probably 3 or 5 years ago.
Stagflation is a very real concern, and for consumers already struggling with rising prices. Goods and services costs going much higher. Now it's a double whammy because they're faced with a potential slower economy.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, October 6th. Our top stories today. On the brink, the U.S. edges closer to a catastrophic default. Senate Republicans are likely to block another Democratic attempt to raise the debt ceiling today. Powell picks up support. A majority of Republicans on key Senate committee would back him for a second term at the Fed. But Democrat Elizabeth Warren says he failed during the Fed's trading scandal. And European leaders tackle the energy crisis. An EU summit, they'll search for ways to resolve the worst shortage the bloc has seen in years. I'm Danny Berger in London alongside Francine Lacqua in Paris and Kailey Leinz in New York. Matt Miller off this week. Francine, you were there in Paris day 2 at the heart of an energy crisis that's gripping Europe, certainly France.
Yeah, and now we have actually the spat, Danny. I mean, it's getting interesting, more interesting by the day. We have the spat between the UK and France over fishing rights. That relates to Brexit, but France actually saying they could hold out in sending some of the gas because of a pipeline that crosses the channel. Now, it's getting ugly on the politics front, and of course, it's filtering through maybe some of the anxiousness that we're seeing out there when it comes to energy prices. Another record in Europe, gaining 22%.
Another record, another ugly day, going from turnaround Tuesday to wreckage Wednesday. Kailey, how much fear are you seeing in these markets when it comes to not just energy, but inflation taking off too?
Yeah, I think inflation fear really encapsulates the market action today due to those higher energy prices broadly spread across the world, really, and it started in Asia. Remember, China is still closed for the Golden Week holiday, but stocks were down in South Korea and Japan by about 1% and 1.8%. And in Hong Kong, you did see some marginal outperformance in terms of the fact that the losses weren't quite as great, but still the Hang Seng was down about 0.6%. And within Hong Kong equities, it was really tech that underperformed. The Hang Seng Tech Index reaching a fresh record low, down for a 5th day in a row, pressured by the higher yields we are seeing really across the world. Of course, the other thing we have to pay attention to in China continually is the property sector crisis. Fantasia missing that dollar bond payment earlier this week, and that is putting continued pressure on high-yield dollar bonds in Asia, which were lower again today. In foreign exchange, I would point out that the Thai baht is the big underperformer in Asian FX after higher than expected inflation. And in G10, it is your Kiwi that is the biggest laggard, weaker against the dollar by more than 1 percentage point after the first rate hike from the central bank in 7 years, but they didn't really provide much clarity on the rate hike path forward. As for the picture here in the U.S., no surprise, futures are deeply in negative territory as well. S&P 500 futures down more than 1 percentage point at this point. And remember, we are coming off 4 consecutive days where the S&P has either gained or lost 1%. So a lot of volatility is out there. Of course, the equity market really beholden to the action in the bond market at this point, and we are seeing yields moving higher today to the tune of about 2.5 basis points. We're sitting at 155 on the 10-year, which is the highest going all the way back to mid-June. Of course, feeding into those inflationary expectations has been the action in the commodity complex. Oil is coming off a little bit today, down about 0.5%, but still at $78.57. It is at the highest or around the highest since 2014. And natural gas prices, as we know, surging in Europe, but also here in the U.S., Danny, up about 0.9% today. Natural gas futures at their highest, going all the way back to December of 2008.
Kailey, it is also an ugly day in Europe, and I should say we're getting some breaking lines across the terminal on data that suggests things might get worse. We're looking at Euro area August retail sales missing estimates, rising 0.3% over month. The estimate was for 0.8%, so that is a miss. We had German factory orders that also missed this morning, too. The data not supportive for an economy gripped by inflation. Those higher yields means we're seeing a pretty severe sell-off in these markets today. What is doing the worst? It's going to be those higher beta countries, those higher beta assets. That means autos are doing poorly. So we're seeing Germany fall 2%, about 2.1%. We're seeing France also fall 1.8%. Anything that has more safety type plays, anything that's lower volatility can outperform today. So you're seeing UK doing a little bit better, but look, it is still down more than 1%. This is the type of environment that Altaf Kassan over at State Street told me this morning that makes him want to move out of equities, or if you are playing in equities, go into low volatility. So a really ugly day. Let's switch up the board so I can give you the view cross asset. And cross asset, the key to today's trade is energy and yields. Kailey, you were mentioning the yields in the U.S. they are taking off like a rocket ship here in the UK, and specifically on the long end of the curve. Yes, 10-year yields are rising, but this is a rise of 5 basis points. Break-evens at their highest since 2008 for the UK. Euro-dollar sinking at 115. Natural gas 28% higher at a record high. And so this one is priced per megawatts per hour. So a 28% increase, Fran. Another way to say this is an increase here for how long it takes to run your home for about 1.2 months. So that's the kind of increase we're seeing at 148 euros per megawatt hour.
Yeah, and the longer, of course, this happens, Danny, this also has huge repercussions on how you run a business. It could have an impact on earnings and certainly on margins. Now, look at what else is ahead today. The UK's government, of course, speaking at the Conservative annual meeting coming to an end. Boris Johnson expected to speak at 6:30 a.m. New York time in his first in-person address to Tory loyalists since the pandemic. Then, just after 9 a.m. New York time, Kansas City Federal Reserve President Esther George talks about the economy. EU leaders meet in Slovenia for the EU Western Balkan Summit. They held an informal dinner last night where China featured as a central theme to their discussions. And then we have ADP also a little bit later in terms of data out of the US. So EU leaders expected to discuss the energy crisis at the EU Western Balkans Summit today. The Commission President Ursula von der Leyen addressed the crisis earlier this morning.
It is a serious issue. I think we have to be very clear that the gas prices are skyrocketing, and but the renewables, the prices have decreased over the last years and are stable. So for us, it's very clear that with energy in the long term, it is important to invest in renewables. That gives us stable prices and more independence.
Now, for more on the summit, we go to our correspondent Maria Tadeo, who's on the ground for us in Brdo, Slovenia. So, Maria, first of all, just how big a threat is this to Europe? First, China, but also energy prices.
Well, you know, Francine, I would say this morning it really is about energy prices here. When you speak to European leaders, they tell you that when it comes to China, remember that EU-China investment deal is pretty much dead. At this point, it's very hard to see it ratified anytime soon. So they're focused on energy. They know that this has big economic repercussions, but essentially, and this we should really stress, what they worry about is the social repercussions that it could have, especially as we enter the winter. Now, today was made very clear by a number of European leaders that the European Union needs to step up action and they need to do more. I spoke with the Spanish Prime Minister and he said that domestic measures going into the winter are not going to be enough to ease the pressure on households. The European Union needs to do more. He hinted that perhaps that could be joint procurement in some of the contracts, but also joint purchases. That's a big, big step forward for the European Union. Remember, Francine, a lot of the issues that we have in Europe has to do with the fact that this is a very complex energy market. There's very different energy components according to each country, and we're looking at 27 different markets. But what is interesting, and this is really the highlight, is that now you see a number of countries that say, just like we did with the vaccines, we should be doing that for the gas going into the winter.
But is there enough agreement, Maria, that we could see their actions ease some of the energy crisis that's gripping Europe?
Well, you know, Danny, there's two things here. One is, of course, we know that there are a number of countries that are more advanced on the renewable front. We also know in particular that there's others that have the nuclear energy and others that are much more reliant on Russian gas. So again, even the situation to speak about consensus, you don't have consensus in terms of the energy mix for every country. So this is a very, very complex issue. Now, we did hear from a number of countries, particularly the Nordics, that say the focus should be very much on accelerating the green transition. That's where we should focus, perhaps not so much on the gas. But of course, if you're a country like Italy or a country like Spain and you're importing all of this to keep your economy going, that's not a good answer, and it's not going to be enough for this winter. Remember, we're heading into potentially a very cold winter, and a lot of this is running on gas prices and gas supply. So for them, just betting their renewables will do the trick is simply not realistic.
All right, Bloomberg's Maria Tadeo in Slovenia, thank you so much. And turning now to Washington, time is growing short to avert a U.S. debt default. Senate Democrats' third attempt to pass legislation to suspend the federal debt ceiling appears poised to fail today as the October 18th deadline looms. Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. So, Joe, if, or should I say when, this vote fails, is the only plan B reconciliation?
It's the most likely plan at this point, but it's interesting, even as this vote comes up for now, what we're discussing a third straight week, a vote set to fail here in the Senate as Chuck Schumer tries to pin down Republicans. A lot of insiders are looking beyond tonight, and you're right, reconciliation is a great possibility, but looking at the calendar, unless this gets started today, maybe tomorrow, it's really unclear that they could make it. Reconciliation can take a couple of weeks here, of course, and if Republicans want to add a bunch of amendments, try to complicate this and slow it down, Democrats really may be running into trouble with a possible default. So this morning we're hearing a lot of talk about the nuclear option, getting rid of the filibuster on this, which would take a simple Democratic majority to do it. But of course, all roads lead to Joe Manchin. We're still talking about the senator from West Virginia, not a fan of doing away with the filibuster, and at this moment would make that impossible.
Joe, at the same time in D.C., Senator Elizabeth Warren has said that revelations about investment transactions last year by Fed officials calls into question Jerome Powell's leadership of the U.S. Central Bank. Take a listen to what she had to say.
I can't support Jay Powell for renomination. So my view is he ends his term, we put somebody else in place, and I think the Fed is going to be better off, and I think our economy is going to be safer.
So Senator Warren there speaking to our David Weston. What kind of position does this put Joe Biden in terms of his support for Powell?
It's interesting the way you ask that, because this could end up paying off for Joe Biden politically in a way. Remarkable comments there with David Weston, some of the most full-throated remarks we've heard from Elizabeth Warren on this. Keep in mind, though, President Biden has an issue right now with moderates in his party and progressives for that matter. And as Republicans accuse President Biden of being led by the progressive wing of the party, which many predicted would happen during the campaign, this could be an opportunity for Joe Biden to kind of go against the grain here with Elizabeth Warren and, in fact, nominate Jay Powell, who just as recently as yesterday, Joe Biden said he supports. Now, that could change, of course. We do have more than half the Republicans on the panel, on the banking committee, supporting Jay Powell, and not that many Democrats are speaking to the extent that Elizabeth Warren is. So we could be seeing a little game of politics here ahead of that reappointment in February.
All right, thanks so much to Bloomberg's Joe Matthew. And of course, you can listen to Joe every weekday on his radio program Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. And let's talk more about Senator Elizabeth Warren, because she accused Facebook, along with other social media giants, of using their wealth to exert influence on Washington in a way that undermines the democratic system. Take a listen.
The loudest voice in this hall is Facebook's and the other giant corporations. They hire the lobbyists, they make the big campaign contributions, and even more importantly, they fund the dark money, the part that you never even see their fingerprints on it. They're the ones who undermine the basic premise of democracy.
Bloomberg's Tom McKenzie joins us now for more. So, of course, Tom, Warren made those remarks after the whistleblower testimony on Capitol Hill yesterday. Is Facebook likely to face any further regulations stemming from this episode in particular?
Well, certainly, and you heard it from Senator Warren there is deep anxiety, concern, anger amongst senators and lawmakers in Capitol Hill. The key issue, and maybe this is to Facebook's benefit, at least in the short to medium term, is there's no consensus around how to approach legislating around some of these issues and concerns around Facebook. There are a number of bills that are working their way through, but this is not bipartisan. There isn't an agreement or a consensus yet on exactly what are the best measures. What we did do, though, is we heard from the chief executive, Mark Zuckerberg himself, for the first time since, of course, his 60 Minutes interview and the Senate hearing that we heard, of course, from the whistleblower, Frances Haugen. And Zuckerberg came out. He didn't apologize. What he says was that this was a mischaracterization by the whistleblower of the work being done at Facebook. He said it simply wasn't true. He also said he's very concerned about the characterization that Facebook doesn't care about the health, the mental health, the safety, the welfare of teenagers as well. And Facebook has come out and pointed to the 400,000 people that it employs around safety and security and the $13 billion that it's been investing since 2016. So that's the Facebook defense. And arguably, at the moment, given the divisions within Washington, they're safe from any regulatory pressure. But the scrutiny is there, certainly.
Yeah, and the stock is feeling it this morning. The share is down nearly 2% in pre-market trading. Thank you so much to Bloomberg's Tom McKenzie. And speaking of stocks moving in pre-market trading, let's take a look at some others. One of them being Palantir. It's a big mover to the upside, up about 9% in pre-market trading after winning an $823 million contract from the U.S. Army for data analytics services. To the downside, though, is GoGo. Of course, it operates in-flight Wi-Fi. It was downgraded at Morgan Stanley on increasing competition, and as a result, that stock is down 6% before the bell. And you also got a downgrade from Goldman Sachs for U.S. Steel. The analyst putting a $21 price target on that stock this morning. It is trading right around that $21 level, down about 5% before the bell, Francine.
Yeah, Kailey, coming up, we'll look at the market's big repricing when it comes to fixed income. And of course, the worries about stagflation. We'll be speaking markets with Jeffrey Yu, BNY Mellon Senior Strategist for EMEA Markets. We'll talk energy prices, inflation, and the worries of stagflation. This is Bloomberg.
There's not a lot of places to go in a regime like we're in now.
It's a very good time to be liquefying assets.
Markets are liquid, so exiting makes sense.
I'm not saying that the market's going to go down 20% tomorrow, but I am saying that there is sensitivity.
You still want to own equities.
If we've got reasonable growth equities, that they are in the end, Tina, they're the only alternative for most people.
What you don't want to own is long duration fixed income.
Sitting long bonds feels like the wrong answer.
Because there you're more vulnerable. There's no place to hide.
Many institutions certainly seeing a home for crypto in their portfolios.
It's crossed the chasm to mainstream.
Whether, Bitcoin and Ethereum, survive at the end of the day, I'm not sure.
The risk reward potential just far outweighs any of the other things that they may be able to look at.
A few highlights from the Bloomberg Invest Global Conference. And day two continues today. We have interviews from Ares co-founder and Carlyle CEO and more as well. So stay tuned for that. Now, let's dive into the market action that we are seeing this morning as inflation fears grip the market. Joining us to dig through it is MLive strategist Eddie van der Walt. So, Eddie, a pretty substantial move, not just in U.S. yields, but really globally. Are we starting to see the beginnings of a taper tantrum?
I think this is taper tantrum 2.0. I think we are seeing the beginnings of it. It's got a little bit of a different outline from the last one that we had. And, whether it is fair to call it a tantrum at this stage, I don't know. But we are definitely starting to see the outline. This time is a little bit different. We are seeing, yield curves were a little bit flatter going in. Equities are a lot more exposed, I think traders are finding. And I think, the ultimate haven in all of this, we had TINA through all of the year. We had buy the dip through all of the year. But the dollar is emerging as the main haven from all of this. And that, surprisingly, is weighing on gold prices because gold is a lot more exposed than you would have thought if you were talking about inflation prices alone.
So, Eddie, what's the dynamic between gas prices and tapering?
It's absolutely feeding into it, right, Francine? We are seeing, if you push up energy prices enough, it is going to feed through into inflation expectations. That is going to feed through into bond yields, and that's going to feed through into stocks. And that's the dynamic that we're seeing here. But that's part of the, of the bigger trade of supply chain disruption and higher commodity prices generally. I think all of those things are feeding in. But this is not the kind of inflation that central bankers like to see. This is cost push inflation. And that's something that you cannot control by pushing up, just interest rates. It's just not that easy for them to control. So this is a worrying development.
Eddie, is this the first sign of a taper tantrum?
Yeah, I think it is. I absolutely think it is. And I think, I think it's going to play out in a different way across markets this time around. I think, this time we're seeing energy prices, energy stocks doing quite well, of course, at the moment. But you really need your wits about you. Some banks might do well on a steeper yield curve, but that's also not going to be true for all of them. So you really need your wits about you. And I think if we do see a proper correction across equity markets here, nobody is immune.
I like that. Keep your wits about you. Eddie, always with his wits about him. Eddie van der Walt there with some pretty spectacular moves in the markets. Now, for more market analysis, of course, check out MLive Go on your Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in Paris and Danny Berger in London. Now let's get the first word news. And first, a strategy shift by the White House. President Biden's team is trying to broker a deal to scale back his ambitious economic agenda. Advisors are weighing liberal policy priorities against moderate concerns about inflation and tax hikes. Meanwhile, the president is trying to drum up support for the plan in trips to political battlegrounds. In Michigan, he called foes of his economic plans complicit in America's decline. In Hong Kong, Chief Executive Carrie Lam has outlined plans to develop the border with China into a major metropolitan area. More than 900,000 homes would be built to ease a housing crisis that's led to social unrest. Lam wants to develop the area as an information and technology hub. And buyers in Asia are paying top dollar for a variety of fuels as they seek alternatives for pricing natural gas. The electricity crisis is roiling energy markets from Europe to Asia. Fuels that can be used for heating or power generation, such as propane, diesel, and fuel oil, are in high demand. Propane prices have surged to a 5-year high, Francine.
Yeah, a lot going on in fuel prices. Coming up, European stocks extending losses. We'll talk about energy prices. We'll talk, of course, about energy security. We speak with Geoff, a senior strategist for Emea markets at BNY Mellon. This is Bloomberg. This is Bloomberg Surveillance, Early Edition. I'm Francine Lacqua in Paris, Danny Berger in London, Kailey Leinz in New York. Danny, if you look at the market, so the sell-off has been gotten a lot worse. There's quite a lot of movements in fixed income. And again, we worry about inflation. Traders try to figure out what these ever-increasing gas prices actually means for companies, their portfolio, and central banks.
I think it's really interesting how that's playing out in equity markets. We know that yields are on a tear, but it's really this dichotomy between being impacted that and going in to buy the dip. Yesterday it was all about dip buying. Today it is about that fear of higher yields. Francine, this is my fun fact of the day. Over the past 4 days, the S&P 500 has either gained or lost 1%. That's the longest streak we've seen since June of 2020. By the way things are shaping up in Europe, we could be adding on another day of a loss of 1%.
I guess 1% is not too bad. I don't know whether it gets worse given what we're seeing right now, Kailey.
Yeah, right now it is pretty ugly on both sides of the Atlantic. In Europe, the losses are pretty steep, right around session lows on the stock 600. Every single sector is in negative territory by at least 0.8%. So really broad-based selling. Broadly, the index is down 2 full percentage points at this point in time. And as Danny was alluding to, we could see another 1% drop on the S&P 500 today, at least judging by futures. But it's big tech, actually, that looks like it could underperform the most. NASDAQ 100 futures right now down by 1.6%. Of course, they may be taking their cues from higher yields in the Treasury market. We're up 1.5 basis points on the U.S. 10-year yield. 154 is where we sit. So we are off session highs. Maybe investors looking for a little bit more safety in the bond market, given the pain in equities. But really what is driving everything seems to be inflation concerns. And the energy crisis is really feeding into that. Just take a look at Dutch natural gas futures. They were up as much as 40% earlier in the session, still higher by 25% right now at 145-ish euros. Now, as for some movers in pre-market trading, I would note the travel complex is under a lot of pressure today. JetBlue got cut to neutral at Goldman Sachs. That stock is down about 3%. Goldman also cut American Airlines to sell. That stock is down 3.6%. And then other travel names, some of the biggest laggards in pre-market trading as well. Delta Airlines and Carnival Cruise Lines each down about 2.5%, Danny.
Kailey, I'm going to bring it back to this big jump in yields. And we often hear that it's not the level of yields, it is the pace of that move. So I'm trying to capture as best as I can to show what that pace has been like. I want to welcome our radio listeners as well because I have a chart in front of me. I know you can't see the chart, so I will explain it. One of the lines I have on here is the 10-year yield. And as I said, the current level that it's at isn't that remarkable. We certainly saw it higher at some points this year. Back in 2019, we saw it higher. But for our radio listening audience, I don't just have the 10-year yield. I also have a line line of two different types of Strategist forecasts for the 10-year yield. I have one here that's for fourth quarter 2021, so this quarter currently, and then finally for the year end of 2022. The remarkable thing is that analysts had just finished slashing their year-end forecast for this and next year, given that the downward trajectory we had seen in yields. In fact, over the past 3 months, the estimates here had decreased about 60 basis points. But because they had just moved, all of a sudden now that we're seeing yields spike up again for our radio listening audience, the current level of where yields are about to come head to head with Strategist analyst forecast for year end of this year. Their estimate is 1.59. We are at 1.54. So a lot of recalibrating. Let's see whether our next guest has had to recalibrate as well. That's Jeffrey Yu, BNY Mellon Senior Strategist for Emea Markets, who joins us now. Jeff, thanks so much for joining us today. So have you had to adjust to a different inflation and perhaps even stagflationary environment?
Not too much, to be honest. We have been thinking about stagflation for some time now. But now the broader question is whether these correlations are going to start to break down. I think in the US, we're still in a relatively comfortable scenario. And I say relative, I stress the word relative here, where you can pass on some of these input costs to the underlying consumer without too much of a growth damage. But in Europe, I think that's a very different story. I look at how UK yields are going up, at how sterling's coming off. I look at how euro's under pressure. I think the stagflationary issues with the emphasis on the stag rather than on the inflation side of it, that's going to be a big problem here in Europe.
So, Jeffrey, are we expecting or are you expecting some kind of taper tantrum in Europe, and will that have spillover effects?
I think we need to go on a country-by-country basis or a region-by-region basis. Probably not for the Eurozone, because the market is not expecting the ECB to advance anytime in the near future. Yes, there's been more talk about second-round effects and the like, but those three tests for additional tightening, I think that's a pretty set in stone. But if you look at the reaction in the UK rates market today, for example, we're looking at 15 basis points by the end of the year. I really think that is pushing it. If the market does expect that, then we may be in a world of pain, especially if the BOE bites.
So, Jeffrey, in this kind of environment, what are you buying and what are you selling?
So firstly, I think on the equity side, you still want to own markets with enough pricing power, basically where you can pass on costs to underlying consumers. And I think the US will still do well in that sense because CPI is higher relative to RPI. You want to underweight the economies where the gap is wide. I think China's in that camp, Eurozone is in that camp as well. UK is sort of somewhere in between right now. In terms of currencies, commodity currencies are doing quite well. We look at our own iFlow index, the likes of Ruble, Norway, they are very well positioned right now. So they may be able to hold on to these positions for the short term, but also other places with current account deficits like sterling and with fiscal tightening, also UK and some other G10 economies. I think those are the areas you want to stay away from.
Geoff, you were talking about pricing power there and how the U.S. companies may have more of that. As we head into earnings season, are you not concerned about margin given some of the higher input costs companies are dealing with?
I'm absolutely concerned about margin, and this is a global issue. But again, it's all relative. If you have a PPI of around 8 and a CPI of around 4, then that's 4%, 400 basis points you need to make up. Look at China. Your PPI is about 9. Your CPI is 1. So then you have 800 basis points to make up. Germany, your PPI is 12. I think it's above 12. CPI is above 4. That's 800 basis points as well. So again, it's all relative, but I think US has a greater margin buffer compared to the rest of the world right now, but still it's going to be a painful environment for all.
Will some of that pain emanate more from China, Geoff?
I think a lot of the China view is actually priced in right now. If anything, if we look at Asia and how underweight the market has been in FX and also to a lesser extent in equities, there's actually hope for a demand boost in China. So how do you get around this margin issue? You invest, you try to get CPI up. So I think the margin is actually gearing up, or just hoping for maybe a mini stimulus, once the National Day holidays are over. So will it be announced? I don't think that's going to happen. It's too late in the year to really get a fiscal stimulus coming through. The PBOC is going to try to help things along. But I think a lot of downside is already priced in Asia, but there's lack of upside as well. So not too bullish there either.
If margin is one concern, what about the other side of this concern in terms of what consumers are willing to pay? How painful does this energy crisis need to get, and inflation in general, to have them back off of what they're willing to buy despite built-up savings?
So this really becomes a market-by-market basis. To take the UK, for example, there are price caps, so there are regulatory issues, and I think all over Europe, governments will be looking into this. On the fiscal side, will there be subsidies to limit the pain for households? And this is where you've got to be really, really careful about interest rate hikes, right? So especially for the US and the UK, where maybe housing exposure, especially with respect to variable rate mortgages, maybe companies are borrowing on variable rate loans, so linked to underlying base rates, for example, you really got to limit the cash flow impact from higher rates right now. So I think right now, markets, if you're pricing in early aggressive tightening, that really is inconsistent with what central banks are trying to achieve. You've got to protect the household, whether through fiscal or lack of rate tightening. I think that has to be the focus for the next 3 to 6 months.
Jeffrey, thanks so much. Jeff Yu there of BNY Mellon. Now, coming up, we'll have plenty more, of course, on the markets. We'll also look at what's going on in the UK. Turning up the heat on the industry, we'll look ahead to Boris Johnson's speech from the Tory party conference. That's coming up next, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today on Balance of Power, General Motors Chairman and CEO Mary Barra. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Francine Lacqua in Paris and Kailey Leinz in New York. UK Prime Minister Boris Johnson is due to speak at the Conservative Party's conference later today. This will be his first in-person address to Tory loyalists since the pandemic. Let's get more with Teresa Raphael, Bloomberg opinion columnist. So the expectation here is that he'll address business, and he said this to some extent before, that they need to cover the cost, that this crisis is an opportunity. Is this him picking a fight with business?
Yeah, I think that's exactly what it is right now, and it's worked for him before. We saw it during the Brexit campaign. His famous F business statement that was he said was really a complaint about corporate lobbyists who didn't want to accept the reality of Brexit. It's effective because the country is facing a lot of what he says are short-term pressures on supply chains. And he's telling business, look, we've been telling you for years you need to be prepared for Brexit. That included tighter labor markets. You need to pay workers more, train them. And it really puts the onus of leveling up on businesses rather than putting the pressure on government. So, I think that's the plan. Whether it actually works out very well remains to be seen, because ultimately, if business doesn't have confidence, they won't invest, they won't hire, and that's a little bit what we'll be seeing, I think, and that's what some of the businesses are telling surveys that they're expecting prices to rise, taxes to rise, not a great time for investment.
But yeah, and Teresa, it does seem, like in the last 2 to 3 weeks, sentiment has turned much worse. We're expecting that Prime Minister Boris Johnson's speech later. Is there anything that he can do or say to get back on track?
I think Johnson will want to put the emphasis on future plans rather than rather than what he is seeing are sort of temporary pressures from rising energy prices and supply chain problems. So he may there's plenty of talk that he might talk about raising the minimum wage. We'll see the Prime Minister talk about investment in infrastructure, most likely, and plans to improve skills and training. So I think his main objective will be, he's a great orator, and he connects with the public and particularly the grassroots very well. And I think his objective will be to try to take the emphasis off the current pressures and and make the case that he's willing to tackle the problems that other leaders haven't. But that's a hard case to make right now when there are the kinds of pressures that we're seeing on prices and shortages and everything from abattoirs to gas stations.
Therese, thank you so much for joining us. Therese Raphael there from our Bloomberg opinion columnist, talking and, of course, writing extensively about the UK. Now, coming up tonight on Peer-to-Peer Conversations, David Rubenstein sits down with Accenture Chair and Chief Executive Julie Sweet. You can catch that interview 9 p.m. in New York. And this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in Paris and Danny Berger in London. Well, Fed Chair Jerome Powell has gained support that could help him win a second term to lead the central bank. More than half the Republicans on the Senate Banking Committee are backing him. But his most visible opponent is Democratic Senator Elizabeth Warren. She spoke with Bloomberg's David Weston yesterday.
I can't support Jay Powell for renomination. So my view is he ends his term, we put somebody else in place, and I think the Fed is going to be better off, and I think our economy is going to be safer.
Okay, somebody else in place. Let's talk about who that somebody else might be. Are you talking with the White House at all, giving them any suggestions? I mean, you've told me that you think Lael Brainerd, for example. You've read some of her writings. You've been impressed by her.
Yeah, I'm not going to talk about private conversations, though. You know, my view on this is right now the question is Powell to nominate or not renominate, and I am in the let's not do this.
Are there other Democratic senators who are with you in that position? We heard you at the hearings. I didn't hear Sherrod Brown take a position exactly. Some Republicans have come out and said they support Jay Powell. Are you hearing from some of your colleagues that they'd at least be open to resisting Jay Powell?
You know, I never want to represent anybody else's point of view, but I am not the only person who has been concerned about his approach to regulation. You know, and I just want to put this in a little bit of context. The way I think about this, I think back to 2007, 2008, when the Fed would not step up and regulate the giant financial institutions. You know, good on monetary policy, but not step up and regulate those financial institutions, afraid to rein them in. And bit at a time, they just kept loosening those regulations until those giant institutions took on too much risk and crashed the whole economy. I came to Washington to make sure that never happens again. So what I want to see now is a Fed chair who cares about both parts of the job. Monetary policy, very important, but willingness to regulate giant financial institutions, equally important.
I haven't talked to anybody who was around for 2007, 2008 who wants to repeat that.
Yeah.
It was not a pleasant experience. Dan Tarullo was my law school classmate, actually, and he could tell you about it.
That's right.
But the question is, how close are we to that now? I mean, how far have we come back from where we were when we had the height of regulation?
So here's what troubles me the most, is that during the past years of, while Powell has been chair of the Fed, every regulatory move has been in the same direction, and that has been to weaken the regulations. Not huge headline grabbing every time, although there have been a couple, but it's been always in the direction of weakening. That makes nominating him for another 5-year term a real risk. We know that some of the risks are already building up. So, for example, when the economy hit choppy waters last year during 2020, and the Fed had to race in and put a lot of support into that economy, the Fed's own report said afterwards, big banks would have lost $300 billion, with a B, dollars if it had not been the case that taxpayer dollars had been used to buoy them. I think that's a real problem.
Senator Elizabeth Warren there speaking with Bloomberg's David Weston yesterday. Now let's get straight to our Tom Keene, co-anchor of Bloomberg Surveillance. Tom, we're talking about the markets. They're churning quite significantly.
They really are. They're correlated and very tight. This is an unusual day. I'm not going to say, Francine, they're cratering. they're plunging and all that emotion. What they are is in lockstep moving down, and out front is energy front and center. George Saravelos does some wonderful math at Deutsche Bank today, and he says, Francine, the energy prices you're enjoying will be a negative 2% hit to GDP. He looks at Asia and says if they follow Europe, there'll be a negative 4% GDP. Their energy mix is different. This is a chart I've never done before on Bloomberg. This is LNG, liquefied natural gas, in Asia. This is the Platts Japan, Korea generic price. It's back a number of years, and what you can see is we've come way out of the range, way out above 3 standard deviations. That's a very elegant disinflationary trend, and it's disappeared.
Tom, when we talk about inflation and core inflation, we always back out energy prices because they're so volatile.
Yep,
but do we need to be... Oh, no, I want to get you going. What are you thinking about that?
I'm with Larry Kudlow on this. Lawrence Kudlow, when he was at Bear Stearns, thought it was the biggest bunch of hot air ever. Larry was right 2 decades ago. He's right now. It's what people feel. I get it that the economists have a trend level, and they may look at Dallas trim. Maybe they look at the Michigan number. Maybe they look at Atlanta statistics. On and on and on. Guess what? It's in the pocketbook and it's real. You got to watch traditionally, Kailey, in America, a gallon of gas. In the zip code I'm in, nobody cares.
Given all of that, Tom, should we also be caring more about the ADP employment report today and jobs on Friday?
They're very, very important, and they can shift the debate. But this morning, these markets, Danny, it's extremely interesting, for example, where Euro is, where Brent is, what the 10-year yield has done, and some of the obscurities like Turkish lira out to 8.92.
It certainly is. Tom, thanks so much. We'll look a full roundup, of course, of energy prices at a 22%, well, at a record high, up 22%. And then we'll, of course, look at all the market dynamics, including where we are with fixed income. Now, this is a look away from the markets of what also we're watching today. And Kailey, I know you're looking at U.S. data that could once again move markets.
Yeah, I'm looking at the ADP data that Tom and Danny were just talking about. It should cross at 8:15 a.m. Eastern time. We're looking for a print of 430,000 in terms of the private payrolls employment change for the month of September. The question is whether or not it gives us any real insight into what the jobs report will look like on Friday, because it was actually quite prescient last month that foretold that the August payrolls report would be a little bit softer, and usually it's not the best signal, but maybe it could be a signal this week. So we obviously have to pay attention to the data and whether or not it signals that great return to the labor market that was supposed to happen in the month of September, Danny, as kids went back to school and additional unemployment benefits rolled off, actually materialized.
I'm watching something a little bit closer to home being where I am, and that's the EU Energy Saga. We're looking at European gas prices take off. They're up 20% today. They're up 637% year to date. We also have the EU Leaders Summit in Slovenia. They've been putting out proposals of what needs to be done, so that will be interesting to see what else comes out. Francine, so this is price per megawatt hour. Today I learned that per megawatt hour, a megawatt hour, that's the same power it takes to toast 89,000 slices of bread. So that's some expensive toast if you're trying to do it in this market here.
Actually, Boris Johnson has been quite entertaining on Twitter, also toasting slices of bread. He wasn't talking about the energy prices, but I think he's trying to get people to buy British butter. So that's a whole other conversation that we need to tune into. But of course, it's all about the energy price. And we'll also listen very intently to that speech by Boris Johnson at the Conservative Party conference. It's the first in-person speech that the Prime Minister is doing. Again, his insistence that higher pay for UK workers is worth the pain of supply chain turmoil is generating a buzz amongst Conservative Party members. So we'll see exactly what he lays out. There are rumors that he plans to raise the minimum wage in the keynote speech today. So I'll be watching that. But of course, coupled with that is U.S. data and, of course, energy prices repricing the markets. More Bloomberg Surveillance up ahead. We'll hear from Barbara Corcoran, the Corcoran Group founder and Shark Tank executives. Look at inflation, look at the markets. This is Bloomberg.